I'm George Ratiu, Manager of Economic Research with Realtor.com. Welcome to December and a season of holidays, bright lights, festive music, and time with family. Economic conditions show signs of resilience mixed with concerns about a slowdown in the year ahead. The second estimate of third quarter real GDP was revised upward this week, indicating that the economy grew at a faster pace than initially measured on account of stronger consumer spending. Meanwhile, the ISM Manufacturing Index contracted in November for the first time since the beginning of the pandemic as new orders declined. The softening in conditions was mirrored in the Federal Reserve's Beige book, a survey of businesses which found that many executives are worried about a recession next year, even with moderating price growth. Speaking of price growth, the PCE price index, including core PCE, the Fed's preferred inflation metric, showed deceleration in October. The slowdown may lead to the Fed resorting to a more moderate 50 basis point rate hike at its meeting later this month. The latest data on job openings indicated that slight cooling is in order, as the number of open positions slid to 10.3 million in October. However, conditions remain in workers' favors. 4 million people left their jobs for better ones. The figures were echoed by the jobless claims numbers, which fell last week. Today's payroll employment report was another positive highlight as companies added more new jobs than expected. The unemployment rate remained unchanged and the average hourly wages continued rising, giving households a stronger position to weather rising prices and housing costs. Reflecting headline concerns over inflation and potential recession, the Consumer Confidence Index fell in November to the lowest level in 4 months. On the real estate front, the slowdown in transactions continues to define markets. Contract signings for existing homes fell for the 5th month in a row as buyers faced rates hitting 7% in October. Home prices reflected the downshift, with both the S&P Case-Shiller and the FHFA prices showing deceleration. Realtor.com's November report also underscored the pullback in home buyer demand. Active inventory rose even as new listings continued declining, and with homes staying longer on the market, price growth moderated. The weak silver lining came from the decline in mortgage rates, with a 30-year fixed rate sliding below 6.5%, offering buyers some reprieve from this year's relentless surge. This week, we also released our 2023 economy and housing forecasts. On the economic front, we expect slowing conditions. The main challenge stems from the Fed's desire for a soft landing, cooling price growth without pushing the economy into a sharp recession in the face of global headwinds. On the housing front, the 2023 market could become a nobody's market, not friendly to buyers or sellers as high costs keep affordability front and center. Stay well this week. We'll keep you in the know at our website and Twitter feed.